Hi, this is Sive Morten with the daily update on EURFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, fellow traders, let's return back to the analysis of the euro currency. Well, on Friday and on Thursday we said that recent price action tells us that market has failed with the upward continuation, and that move to the upside from that strong area was just the retracement and respect of the support, as well as attempt of the market to correct and adjust the unsuitable, uncomfortable oversold situation. That has happened. Since the euro currency, the financial markets very rare stance in the oversold and overbought for the extended period of time. They tend to leave this condition as soon as possible. That has happened. In general, if you will read our analysis of the weekly time frame and monthly time frame, the major conclusion of that will be that market is ready to show some deeper move. Currently it's a bit difficult to suggest will it be reversal and continuation of the long-term monthly trend to the downside, and that could be market as far as to 120 or even 116, as we suggest in the November of the previous year, that market would stand now in the long-term bear trend, or it will be just deep retracement on the monthly time frame that gives us greater ABCD pattern to the upside. Currently we can't answer on that question, but what we do know is that on the shorter term perspective, for the trading purposes, we could count on some downward continuation. The weekly analysis leads us right to the 130.60 to 130.73 area at minimum. So that is the minimum target on the weekly time frame that could be reached. But from the daily perspective, it's a bit not quite topical currently, because you can see this area is too far and stands beyond the daily oversold. That is not very interesting for us. That's why we have no choice just to be focused on maximum downward target that we could reach in the nearest couple of sessions is right here. That is the daily confidence support 132.70, 133.10 area. That is also daily oversold, and it stands rather close to the weekly pivot support 1. By the way, monthly pivot support 1. Weekly pivot support 1 will stand right in this area as well, so that will be rather strong support. Also that we have here is ABCD pattern to the downside in this target. So you can see that market stands relatively close to this area. It's about 100 pips. But still, if market will show some rally, then we could take use for the short entry. We could try to enter long or short with the target somewhere around this area. That is possible. As you can see, the overall price action here looks like the head and shoulders pattern that leads us to the much deeper target. So again, will be right around this area, 130.62 area. So if you count the distance from the top of the head right to the neckline, count it in the direction of the potential breakout, you will get precisely in this area. That stands in agreement with the targets on the weekly time frame. But again, we will keep in mind this area, but we will not be focused on it within the Monday and Tuesday trading session because it's too extended to the downside. We now have to think about how to deal with this support cluster, because you can see market is a bit caught inside of this distance between the current price action and the target. So that's not very extended range where market could show any action. And I think that market should, after some pullback to the upside on the intraday charts, could show the continuation right to this area. What will we do next? Well, it depends on situation, how market will respond with this area. But currently on Monday, I think that could be now a trading plan, search for entry on the short side of the market with some intraday rally to catch the target somewhere around this support cluster. Well, on the 4-hour time frame, what we see? Trend on the daily time frame is bearish, by the way. Sorry, that is 30-minute chart right here. So that is 4-hour time frame of the euro currency. Market now stands at the support, that is the neckline support on the daily time frame, and that is also, by the way, the 618 extension of that pattern. A, B, C, top, the same pattern. The 618 extension stands right here. So market now stands at support. We see here the bullish divergence with the MACD indicator. So some pullback could follow. That is the rally that we expect. Something like was on Friday when we take the shorts right around this area. For those of you who have skipped this entry point, don't upset with this, since you could try to do this by rally that could happen in the beginning of the week. There are two levels to watch for. The first level is 134 or 9, it's right here, and weekly pivot point. The second level is hourly confidence support resistance 134.60, 134.72, and relatively close stands the weekly pivot resistance 1. Well, theoretically, market could show the pullback right only till the weekly pivot point tested and continue move to the downside. Because market currently not at oversold, market now doesn't stand at any significant support yet, so just as the trend line. Well, and it looks like that this pullback could be reasonable. But if you will take a look at the picture on the 30-minute chart, you'll see that this price action probably could be treated as some sort of the double bottom, because there are all components of the double bottom except maybe harmony. It's a bit too steep move, that is too flat, again too steep. It's not very looks like not very pretty, but the price action very common to the double bottom pattern. As you can see, market has shown as well the wash and rinse of the previous bottom. That is very typical for that pattern and returns right back. That is I think that probably it could work as the double bottom pattern. Also take a look here, and here we have the bullish stop grabbers that suggest the taking out of these highs, or maybe even these highs to the upside, the breaking of the neckline of this pattern. If it will be indeed the double bottom, then if we will estimate the target, that is distance between bottoms and the neckline, counted to the upside, it will give us the area around 134.55 area. Now switch to the 4-hour time frame. Right, it's somewhere around the weekly pivot resistance 1 and confidence resistance on the 4-hour time frame. That's why I think that market could pass a bit deeper to the upside and only after that start move to the downside. That could be some sort of the pattern that is forming here. Then could be some acceleration to the downside if it will be work as it looks in the current situation. So as usual, you could use different entry techniques. So you could use, for instance, scale in, enter with a small lot here. Market will proceed higher, then add the most part of your position from that area. Another way to enter on the short side of the market is the according to the Jordan-Napoli minesweeper technique. So for instance, you wait when the market will find resistance. You do not care where it will happen, but preferably if it will happen here or here, for instance from that area, then you will wait when the market will turn to the downside. When this happens, you have to drop your time frame to the hourly time frame, wait when the hourly time frame trend will shift to the bearish side, and then catch the first small retracement on the hourly time frame from this starting swing down to enter the short side of the market. That technique could give you even better entry point than right here. So as you can understand, it's a lot of different ways to enter the market. Maybe you have your own technique how to enter, but the overall price action suggests a couple of things. First thing is that market probably will show the rally in the beginning of the week, some retracement to the upside. Second is that overall situation is bearish, and we could count on the move to the downside for another 100 pips right to significant support area on the daily time frame. That will be our analysis and trading plan for the beginning of the next week.